Hi everybody, it's Marcus Collins from MMA Properties with a market update for Arlington. What we're going to be looking at here is 2020, what happened, as well as some historical perspective, and then give you a sense of what's going to happen in 2021. Now, I'm usually joined by Danny for these, but Danny can't be here this evening, so it's just me to talk to you about what's happening with the Arlington market, as I say, 2020 and also 2021. So why do we do these? Well, it's relatively easy to get data today, but what's much more difficult is to get that insight in terms of what's happening today, as well as kind of a retrospective view, because in many cases you need to look at the past to see what's happening today and actually what might happen in the future. And for those of you who've listened to us before, anybody really in the team, we really do obsess over information about the market. We very much do that. So it's really our world. We pride ourselves on having access to a huge amount of information, and we really do study those markets pretty obsessively. So this evening, for Arlington, I'm going to touch on a few different areas. We'll look at single family. And then we'll look at the condominium market, clearly a big part of the Arlington market, condominiums. Then we don't normally touch on it that much, but I wanted to give you some insight in terms of what's happening with new construction in Arlington, as it's kind of a growing piece of the market. And then we'll give you some kind of wider perspectives and the predictions for 2021. So, where do you find all of this information if not on this video? Well, for those of you who live in Arlington, we produce an annual market review. Here's the paper copy, put it that way. We deliver it to all the households in Arlington. So if you live in Arlington, you should have got this in the mail. If you don't live in Arlington, but you're interested in the market, or you didn't get it in the mail, you can get it on our website in an electronic form, or if you reach out to us, we can absolutely get you a copy, pop it in the mail, pop it in your mailbox. So if you'd like a copy of this, please reach out to us. We'd be more than willing to send it to you. What you'll find within it is lots and lots of information. Here's just a kind of insight here, graphs about what's going on in the market, as well as our analysis of what we think's happened, and going to happen. And I said we focus on single family market, condominium, new construction. We also take a look at the rental market. I'm not going to talk about it this evening. This is about home buying and selling, but we also do a section on the rental market, as well as then a kind of wider perspective in terms of what's happening with the market in general and specifically what's happening in Arlington. So, Arlington Market Review, if you'd like a copy, please reach out to us. We're more than willing to pop it in the mail or go on our website and you will find it there. So let's take a look at single family homes. What I'm going to do is walk you through a whole series of graphs, different metrics about the town, give you the kind of perspective on that in terms of both historical and what's happening in 2020. Clearly a very important year, but also what's happening moving forward. So, first one I want to look at is the inventory levels. Now, a little bit of explanation about what this data is. First of the month, it's how many homes are available to buy. And so every first of the month, and I've been doing this for a long time now, how many homes are available. As an absolute number, it doesn't really mean very much. And what's much more important is the perspective of that, the trends, what's happened historically, because that definitely gives us an insight as to what's going to happen moving forward. So it's about the overall shape of the graph here, not the absolute numbers that you see. You can read a lot into the last decade's worth of information for Arlington, because if you go back all the way to 2011, you can see that inventory levels were relatively high. And they've been at that level ever since the correction, the housing bubble, the crash and so on. They've been at those relatively high levels. And then what we saw in 2012 is a gradual reduction. And then in 13, an even larger reduction in the number of inventory. And what's happening here is buyer confidence returning to the market. In 2012, we saw a large number of first-time home buyers moving out of the rentals. Okay, now's the time to move into my first home, be it a condominium or a single family. So 2012 is sort of the start of that buyer confidence return. 2013 saw that buyer confidence return, in force, if you like. Interestingly, if you look at other towns, you don't see that reduction in 2012, but you do see the reduction in 2013. It's almost like a light switch went off in 2013. Buyers came back into the market en masse, if you will. What we're seeing here in Arlington, though, is the start of the first-time home buyers coming into the market. They don't have a home to sell. They're currently renting. Perhaps they've moved into the area. They don't have to worry about selling a home, and so they were able to come into the market. And that's why you see that reduction in 2012, driven primarily by first-time home buyers without any home to sell. And then 2013, building on that dramatic reduction in inventory levels as buyer confidence came back, say in force, and the buyers came into the market in large numbers. That continued all the way through to about 2018, and specifically the end of 2018. Now, if we remember back to the discussion at the end of 2018 or 2019, I guess it's a long time ago, and we've all been focused on COVID in 2020. But there was lots of discussion around the housing market, and was there going to be a correction? Was it going to be not necessarily a bubble, but more of a correction? That perception of that economic downturn, if you will, it actually happened in early 2020, but there was a talk of it late 18 all the way through 19. What we saw is a large number of listings coming on the market, but not that many buyers on the market to absorb all that inventory. Historically, whatever came on the market realistically sold if it was priced well. That changed at the end of 2018. Homes came on. Sellers thinking maybe now's the right time to bring my home on the market. Maybe house prices have peaked. Let's bring my home on the market before they perhaps decline. Buyers being somewhat reluctant to come into the market. Perhaps house prices are going to decline in 2019 or 2020. And so we have an excess of supply, and you can see it in that peak in the second half, that's fall market of 2018, and it continued at those relatively high numbers into 2019. 2020, a different perspective. High inventory levels in comparison to 2017, if anything, but again, that number, relatively low. They were selling well until you get to the fall of 2020, and I have a lot more to say about what caused that kind of peak later on when we get to condominiums. So a bit of a teaser there, so stay with it, stay with this video until we get to the condominiums, because that's a lot to explain what's going on in the fall market in terms of that peak. But that's kind of the inventory level, you say relatively low, increasing in 18 and 19, and then 2020, those inventory levels coming down somewhat. Now, if we now look at home sales, that's the next graph we're going to look at. Blue is existing homes, green is the new construction, and then the orange color are the off-market teardowns. Those are homes that didn't come on the market, were bought up by developers and converted into new construction. A relatively small part of the Arlington market, much higher, for example, in Lexington. That's what's going on. So relatively static, a slight reduction in terms of 16, 17, 18. It kind of declined somewhat in terms of the number of sales. That's what it doesn't tell you is the number of listings. That declined slightly. Some of that because the sellers in Arlington, where do they move to? Where do they go? You're at a relatively low price point in comparison to the towns around. And so where do buyers go to? Some clearly move up market, but in terms of the downsizers, difficult to see where they actually go if they're currently in the Arlington market. So relatively static number of home sales that we're seeing here running throughout this period. In order to get a sense of buyer confidence, we look at two metrics. The first one to look at is days on the market. That's how many days a home remains on the market until it actually goes under agreement. As you can see, the numbers are relatively low, and they have been all the way since 2017, really, at about 20. It's hard for it to get below 20 on average, given how long it takes for a home to come on the market, get an accepted offer, get to purchase and sale, that can take around about 7, 8, 9, 15 days. And so it's difficult on average to get a number much below 20. So that's about as low as it's going to get as an aggregate number. So clearly a very, very strong market. The other metric we look at is the sell price to list price ratio. So imagine a home comes on the market for 700,000 and it sells for 700,000. That's 100% sell price to list price ratio. If it sells 700 comes on, it sells for 750, clearly that number is over 100%. So if we look at that ratio in Arlington, you can see that the ratios beat the average ratio now has been upwards of 104, 105%. Dipped slightly in 2019, rose again to 102%, but overall that number being over 100% shows a very, very strong market in the town. That's what that tells, that there's a lot of confidence in the buyer community in Arlington. Took a little bit of a dip in 2019 because of, as I said before, the perception that there was perhaps a housing correction coming. But 2020, it kind of rose to somewhere where we've seen over the last few years. So that's kind of, symptomatic or shows you how strong the market is. For comparison, Winchester, Lexington, somewhat higher prices, they're running at about 99%. So much stronger town, primarily because of the price point. If you look at the lower priced homes in those more expensive towns, Winchester and Lexington, for example, you see a number which is consistent with what we see in Arlington. And that shows the strength of the housing market, somewhere between, call it 500 and a million, maybe 500 and 1.2. That's a very, very strong market within the town. In terms of average prices, which is what everybody clearly wants to know, they've been rising quite steadily. Took a little bit of a slowdown in 2019, but rose again, not that high though, but still, about 3% in terms of 2020. We can say this is a relatively accurate number too. There's not much to distort this average, and the same is true of median too. In terms of the price distribution, if you have a mix of more affordable homes and more expensive homes, then it's likely, of course, that that distribution can be, the average can be skewed by that distribution changing. Overall, the distribution in Arlington's been the same for a number of years, and so this really is a good metric in terms of a good measure of what price appreciation is in the town, around about 3%, perhaps in some areas 5%, but not much more than that, so about 3%. It's interesting to see what really the impact of COVID was on the overall housing market, and you can see that by the next graph, which shows you the cumulative sales. Actually, what I've done here is some explanation because the numbers are different from the number of home sales. So what I've done here is map how many homes went under agreement week by week. And I did it for 2019 and 2020. And we're comparing those two numbers. I looked at when the home went under agreement because I wanted to back out the 6-week or so delay that we see between under agreement and selling. I wanted to back that out of it. And so it's a good measure of how quickly homes sell as well. So, as I say, it's when homes went under agreement. That's why the numbers differ from the home sales. You can see that in the orange, which is 2019, the graph at the back, it's relatively steady curve. It slows down a little bit once we get to Halloween and Thanksgiving, traditional winter market where the number of homes coming on the market, and therefore the number of home sales begins to plateau. But what's interesting, and I'll try and show you this with the cursor, I don't know if you can see this online, but around about the second half of March, just the second half of February going into March, all the way through to early May, that gradient of that curve flattens. And that's that very few homes came on the market. That's COVID kicking in. What we saw in that end of February, March timeframe, sellers reluctant to bring their home on the market as the pandemic increased. And so the number of home sales stopped. Big question we had at the time is, at what point do we anticipate home sales coming back. And it turns out that it happened around about early May, second or third week of May, as you can see from this kind of step point here, this point here, off went that curve. And then it quickly caught up with 2019 data by about September and has kind of matched it moving forward. So we didn't see any huge increase in the number of sales. We just saw a flattening of the curve, and then we relatively quickly made up for that reduction as by the time we got into after the summer, you can see it there. So that's kind of an interesting, one thing you can also see if I show you this kind of the orange graph, this point here over the summer, the number of home sales and number of listings and number of home sales over the summer begins to decline, and you can see a slight flattening of the curve for 2019 in that data. We didn't see that in 2020. It was almost as if, once we got to mid-May, we saw homes coming on the market every week, irrespective of the time of year, and so it continued, and it really didn't slow down until we got to that kind of Thanksgiving time frame. So that's kind of COVID. What was the impact of COVID on the housing market? And you can see it there. It is this flattening of the curve for 2020 versus 2019. Looking a little bit deeper at the data, breaking it out, everything I've showed you has been an aggregate, broken it out here by price point, 0 to 750, 750 to a million, million to 1.5 and so on. What you can see in that 750 to a million, a relatively high sale price to list price ratio. Low days on the market, 18 in fact for 750 to a million, and then 104% for that sale price to list price ratio. And then it declines, unsurprisingly, as you get to the higher price points, so those ratios begin to decline. Days on the market increases, and the sale price to list price ratio begins to decrease to about 96 when you get to the 2 to 2.5 million. Two houses in that price point, so don't read too much into that. In terms of the 1.5 to 2, we saw a few more homes selling there, 22. There we saw that ratio about 99%. So that's kind of normally what you would see in terms of that. One way to get a kind of sanity check, if you will, in terms of price appreciation is to look at the rate of change of living area. We do that too, to come up with that kind of 3 to 5%. What we can expect is the rate of change of that living area too. So that's the kind of way to give you a sense of that. Right, so that's single family. Let's turn our attention now to condominiums. Much more variability in terms of the homes number of sales in condominiums. As you can see, it oscillates quite a lot. We always see that year on year. There's a kind of change. Green in this case is new construction, and then blue is the existing homes, predominantly existing homes, of course. Does vary somewhat. Can't read too much into the slight increase we saw 2020 versus 2019. There is a natural variability to the number of condominiums that come on the market. In terms of the average price, we saw a steady increase in the average price, roughly the same rate of appreciation as we saw in single family, and that's true in the median too. So relatively static price appreciation at about 3 to 5% in the condominium market too. Much lower number though, 900 and so thousand for single family. I think we can reliably predict that we'll see over a million for the average sale price in 2021, 930 from recollection in 2020, so over a million in 2021. Single family, around about 660, 665 in fact, for the median sale price. So considerably cheaper, or more affordable, perhaps a better way to describe it, condominium versus single family, no surprise there. Interesting to look at that sale price to list price ratio, because that's seen something of a dip, but let's put this in perspective here. Still we're at 101, 102% in 2019, 101% in 2020. But we definitely saw a slight reduction in the sale price to list price ratio for condominiums. And it's interesting to look at this month by month, because as I mentioned before, there was that peak in the inventory level. You can see that beginning to show up here when we look at the sale price to list price ratio month by month for 2020. So January, February, March, it was up at the usual levels that we see. But as you can see, from June onwards, it began to decline. And we saw a definite decline in that kind of October, November, December timeframe. So there's a steady decline in that ratio. One of the things at play here, if you think back to COVID, still with us, of course, but there was something of a reluctance by buyers to move into condominiums because of the shared space. Now, you clearly don't have that in single family, you have your own space, but in a condominium, you have some shared space. And there was some reluctance by the buyers to move into a house or a condo where there was shared space. Now, that's the kind of negative of that. On the other side, $665 average sale price for condominium versus $900 for single family. So it's more affordable. So there was a little bit of tension here. Yes, they're more affordable, but there is some shared space that I'm a little bit reluctant to perhaps, lack of buyer confidence because of that. And that's why you saw that ratio begin to decline. If we look at the cumulative graph that I showed you before for single family, look at it for condominiums, it's quite interesting because if you look at this, there is no reduction in that late February, May timeframe. It's almost like COVID didn't exist. But what is interesting is that once we got to July, where I have my cursor here, you can see that the number of condominium listings and sales increased quite dramatically in the second half of the year. So we had a lot of listings, condominium listings coming on the market. Yes, they were selling, but perhaps that little bit of buyer confidence not as high as we'd expected it to be. That's why that ratio came down. So a lot came on, a lot sold in the end, but there was that little bit of buyer reticent, if you like, in terms of moving into that share space, counteracted by the lower sale price than it is for single family and the difficulty of buying a single family home in Arlington. Very, very difficult. Over the winter, there was literally no single family inventory. We would have expected, there to be 20 or 30 homes. This year, it was in the single digits. So difficult to buy single family, lower price point for condominiums, but I'm a little bit reluctant because of that shared space. So that's what's playing out with the condominium market, specifically in the second half of the year. As you can see, a large number of condos came on the market, far more than we would ordinarily have expected, that some of them took some time to sell. And we saw this with homes that condominiums we brought on the market, that there was that kind of reluctance for people to buy. It sold eventually. What this doesn't show you, of course, is were there any price reductions, for example. But they did sell eventually, but there was that little bit of reticence by the buyers to move in because of the shared space. So that's what's happening with that's what happened with the condominium. And they say, if you think back to the inventory graph, there was a sharp peak in that September-October timeframe, and that was caused by the large number of condominiums coming on the market in that fall market. So turn our attention now to new construction. It's a relatively small part of the market, but it's growing, as you can see here. Historically, in 2011, 2012, 2013, it was in the single digits. It really wasn't very high, but it's risen to be in the low 20s. We saw 22, in 2020. Difficult for developers. Well, take a step back and where are those new construction homes? Some of them are subdivisions, but it's difficult to find land in Arlington, as it is in many towns within the area, of course. And so what we're seeing here is that developers are having to buy existing homes, tear them down to put new construction up. That's hard because, remember, Arlington's a very strong market. And so the developers found they were competing with the home buyers, of which there are a lot. And it's really only when the price of new construction got to a level higher than it's been previously that the developers found themselves being able to compete with the home buyers. The heuristic in terms of how much a developer will pay for a tear down, if you like, is a third for the acquisition of the house, a third to build the new construction, and then a third profit. If you analyze the data in terms of what developers are paying, in Arlington it's much higher than that. It's upwards of about 40%. for the acquisition. So profit levels, clearly take a hit in that level. And so we're looking for new construction homes at a higher price. Once they get to a higher price, divide that by a third, or by take 40% of it. If that allows them to compete with the home buyers in Arlington, then they can compete. But that's really not at the level we see in other towns. You can see that playing out in terms of the number of more expensive homes, new construction homes. This is the sell distribution for 2017, 18, 19 and 2020. And I've broken it down by price point. And you can see that distribution shift to the higher price points. Now in 2020, if I look at the data, we've got 11 in that 1 to 1.5, 9 in that 1.5 to 2, and then 2 over $2 million. Look back to 2019, we had 4 between 1.5 and 2 and nothing over 2. So the price point is being shifted. The market can bear a higher price, and that allows the developers to pay more for the tear downs. And so that's why we're seeing a larger number of new construction in Arlington than we do have seen previously. That's what's kind of going on. So, but what this shows, of course, is that you can, in the right location, sell a home in Arlington for over 1.5. In fact, in a really good location, you can sell a new construction home for over $2 million. No existing homes sold for over $2 million. They were both new construction in 2020, for example. So that's what's happening with the new construction market. As house prices begin to shift higher, so the developers are finding themselves being able to compete with the home buyers. But that's still kind of tough. And let me explain a little bit why it's tough and what's happening in terms of the wider perspective. So if you think about what's driving the housing market today, it's interesting to look at demographics. This is a graph that shows you how many people are within each age bracket. It's done by age. This was done in 2015. We'll hopefully get some updated data this year. But there are two bumps, if you like, two increases in this graph going up. And I've highlighted these in yellow here. The higher one is the baby boomers. That is the first-time home, the sellers who were born, or the children who were born just after World War II. Excuse me. Those babies are now, of course, reaching retirement age, and they're beginning to think about downsizing. The lower bracket is the first-time home buyers. Those are the buyers that are now able to come into the market, and they are coming in to buy their first home. If you think about Arlington, it's ideally positioned for both groups. If you're a first-time home buyer currently renting in Cambridge or Somerville or even Boston itself, it's a great destination. It's got a great commute. It's close proximity to Boston. It's a very vibrant town, and it's got a great school system. So it begins to tick all of the boxes for our first-time home buyers. In terms of our downsizers, it's close to where I currently live. Perhaps you're in Winchester or Belmont or Lexington. It's close to where I currently live. So my circle of friends will remain close by. It's got a vibrant town. It's close to Boston. It's got a good school system. Not that I'm particularly interested in it today because my children are already graduated from school, but it's great for resale. So it ticks the box for the downsizers too. And this is why Arlington has seen strong demand for the homes within the town, with an average price point of $900 for single family, $660 for condominiums. It finds itself ideally positioned for both first-time home buyers and downsizers, and there are a large number of those in the market. So that's what's driving the Arlington market. In terms of COVID, what's driven the market? Slight shift, in fact. In terms of size of home, there's been a shift in terms of people requiring somewhat larger homes. In terms of commute, less important than it's been. And so when you think the conversations we would have with buyers in terms of where you're looking to buy would focus on schools, always important. Commute, not quite as important as it was previously. Size of home, well, maybe I want a slightly larger home. I certainly would like a single family home versus a condominium. And that's what you can see play out in the condo market, second half of the year in the condo market. That shift from, I would like actually a single family home to give me a little bit of space. Perhaps it's a little bit larger. Maybe I need an office in the basement or whatever it may be. And so a kind of shift to a slightly larger home. This is why when you think about, if I'm going out on Route 2, Lexington, Concord, Acton, Westford have seen an increase in the number of home sales and certainly increase in house price appreciation as people buyers began to think, I'm okay with the commute from Concord. I can buy a slightly larger home in Concord. I'm okay with the commute from Acton. It's a little bit further out, but I can buy more from my money than I can in a Concord or a Lexington, for example. And so we have seen a shift in buyer preferences, less emphasis on the commute, more emphasis on what I can buy for my money in terms of a slightly larger home. So that's kind of playing out in this market, and that will continue as in terms of 2021 and perhaps even moving forward, thinking we'll get back to normal sometime this year, into 2022. The other thing to look at and think about in this market is interest rates. And I put this in because back in 2018, we were thinking interest rates were going to rise, but they were still at a relatively low level. Look at what's happened. They've declined since. Blue in this case is historic. Green is projections, just to give you a sense of that. But as you can see, even though 2018 we were saying it's a relatively low number, it's certainly not at the level that's going to be an impediment to people buying homes. It's dramatically lower than where we are today. That low number we see in 2021 or 2020 and now 2021 is why we saw some slowdown in the financing market. Because what happened in 2020 as lenders moved to remote working, many existing home buyers thought about or started to refi, many buyers coming into the market, and so lo and behold, the banks found themselves swamped. And that's why we did see, certainly the beginning of 2020, as everybody kind of figured out working from home, how the slowdown in terms of the number of closings, or slow down in the way financing happens, and delays in closing. So, but a relatively low number. The predictions are that they will remain in that about 3% level. This is 30-year fixed, for example, throughout 2021 and perhaps into 2022. At that point, there perhaps is an increase as perhaps the stimulus and people coming back into workforce and so on will begin to kind of increase the inflationary risk. And it looks like we may well see an increase. But that's 2022, and who knows when that will happen. It's my experience that the markets have been very poor at predicting interest rates. Very, very poor. The projections rarely pan out, certainly the timing of them anyway, in terms of what the projections are. So I think we can only reliably look at the 2021 numbers. I don't have myself think there's much veracity and much reliability in the 2022 numbers. So what about 2021? What will it bring? So here we are, I'm recording this in early March. What can we expect in terms of 2021? So let's break it out, sellers versus buyers. In terms of the number of buyers in the market, there were a large number of buyers in the market who were unsuccessful in 2020. They are still in the market and will only be supplemented by new buyers, as is normally the trend. And so we will see a large number of buyers in the market in 2021. That's good for sellers, not quite so good for buyers, of course, in that they will find themselves in an increasingly competitive environment. In terms of the number of sellers, it was relatively static in 2020, and it will remain that way, given that a seller is also a buyer. And if it's tough to buy, then maybe I can't or won't sell. So we will see the same number of sellers in the market in 2021 that we saw in 2020. So it will very much be a strong seller's market. If you're a seller wondering, how do I downsize? How do I move, in this market? Reach out to us. We have lots of strategies for how we can time that buy and a sell. Lots of things we can talk about in terms of that. So please reach out to us if you're confused, you're wondering how you're going to do that. How do I time that buy and a sell? We have lots of strategies that we can explain to you, that we can tailor to your specific situation. But so, back to predictions, similar number of sellers in the market, strong buyer market with buyers looking to buy, and realistically not enough supply in Arlington for the number of buyers we will see in the market. And so many of those buyers will look in other towns. And we've seen, as we kind of think about that price point, as we look a little bit further out, Watertown, Waltham, Burlington, and so on, an increase in the number of sales in those towns because, it's tough to buy in Arlington. It's also quite expensive at an average of 900,000. Buyers looking a little bit further out. But overall, a very strong market in 2021. Definitely a seller's market. Static number of sellers, increasing number of buyers. So that's it. I hope that was useful. Why do we do this? Back to that again. We really do think that our clients, whether they buyers or they're sellers, really should be the smartest person at the closing table. This is the way we think, because everybody benefits from being smarter at home buying and home selling. So that's why we do what we do here, and I hope you've enjoyed it. Lots of information to share. As I said before, lots of information in the Arlington Market Review. We also do a similar one for Lexington. So if you're interested in that town, reach out to us. We have lots of information on our website around the topics of what I discussed here. So I hope that was useful. If you have any questions, please reach out to us. Until I do this again next month, thanks for watching and bye.